Hey everybody, it's Mike from Orderflows here, and welcome back to my channel. I'm glad you could join me for today's video, where I'll be talking about delta weakness. Um, delta is, to me, one of the cornerstones of order flow, right? Delta is the difference between net aggressive buying and aggressive selling in a bar. And, every once in a while, someone will post a comment under one of my videos about delta, is useless. Delta doesn't matter anymore. And I joke that I get triggered by it. Honestly, I don't get triggered by it. I do know that everyone has their opinion on how they approach the market, how they trade the market, and what they look at, right? Being an order flow trader, I think, things like delta are very important. The people that are commenting on that, they got their own way, and God bless them. If it's successful for them, then, so be it. It's one of those things where, in trading is a journey. You don't really get to that final destination. Okay, so let's go ahead and get started with today's topic of delta weakness. Okay, now, when you think of the term weakness, right, you think of something getting, weaker, like a move ending or something. But in the sense when I talk about delta weakness, really what I'm talking about is there's a weakening in the delta from strong to kind of like neutral. And really quick on our software, well, I'm going to show you, how to see it if you're not using the software. On our software, we have it right here. We call it market weakness, okay? And, you could have a certain length that you want to look at, right? It's going to be colored blue, violet, or dark orange. So you can see right here, right? This is the delta weakness in the sense that the aggressive selling is getting weaker, right? What it's looking for is delta basically decreasing over time. And you can see it, quite clearly here, minus 609, minus 310, minus 26. Okay, so the delta by itself, one bar's delta in a vacuum doesn't have much meaning sometimes. I mean, there are times that it does, but in general, the market's going to do what the market's going to do, which is facilitate trade. But when you have it over a sustained period of time, in this case 3 bars, where you have strong negative delta, 609, weaker 310, still negative, but then minus 26, right? Where is that aggressive selling? It's being, I'll say it's being removed, but it's drying up, right? And that often is a sign of a potential market reversal. And you can see here, right, we got this little pop up here, right? Right now it's 3 in the afternoon here. We just closed on Friday, but same thing here, right? Market is going up, right? This is the bearish market weakness in the sense that you have aggressive buying, right? We just took out this swing high, and maybe potentially we're going to go higher. You see the deltas, 976 strong, 811, 894, 516. Only 189 up here. Then even within this bar, if you're analyzing the delta, you can see it went from positive 189, it went from max delta of 711 and it just finished at 189. So on this way up, even though we're going higher, price is going higher, you have aggressive buyers in there, but the aggressive buying is weakening, right? So if that aggressive buying on a move up is weakening, who's going to take the market higher once those aggressive buyers, which is causing the positive delta, are done buying? No one. The aggressive selling just sort of takes over from there, and you can see the market sell off. Here I can see this purple line. Let's go take a look at it. There's a few. These came from earlier, right? You went up, pulled back. On your pullback, that aggressive selling was getting a little bit weaker. Down, down, down. Again, we had been going up here. We pull back. It's getting weaker. The selling is getting weaker. Those are those nice pullbacks that you want to buy. Okay, here is some aggressive buying that weakened. Then it took off again. So this one failed. But down here, right, you got one here, one here. Okay, so yeah, this one failed. Again, not always does it immediately end. But again, if you know how to trade, right, and using risk management, using stops in the market, yeah, okay, you take your stop, you get stopped out here, but you got a nice trade right here. The next one is a beautiful one, right from the 25-ish area all the way up to 35. It's a nice 10-point move. Right here's a nice bearish one, right? We sold off, pulled back, But on this pullback, that aggressive buying, right? Because anytime you pull back, you could just keep going higher. But if you can identify that this aggressive buying on this pullback has weakened and is basically being shut off, well, what do you think is going to happen? You can position yourself to take a nice low risk trade, getting short right, after this bar is closing, and we start to trade down a little bit, getting short here at 32, a stop just above this high, and it goes down a quick 10 points down to 22, right? There's more levels in here. I want to find those, that one was generated on a number, so I'm not sure I'd be willing to take it. Anytime a big number comes out, let's say it was non-farm payrolls, you gotta be careful. Now, this is an 8 range chart, okay? And I've talked about choosing your chart type to suit your trading style. If I were to go to a minute-based chart, right, this is a 1 minute chart, today, same day, I don't think there was, there was one signal here. There's a bearish signal. Just open that up a little bit, right? You got this little pullback. And it sold off, 15 down to 13, 12 and a half. I think that was about it, right? I mean, there's one here. There's a small one potentially here, but the next bar didn't even go lower, so I wouldn't even consider that one. I like the market to start moving lower if I get the signal, if I get a short signal, or moving higher if I get a buy signal. Here was a buy down here as you're sort of going sideways. But on the 1 minute chart, right, you don't see any signals. On the 8 range chart, you see a bunch of signals. Now, if you go to, this is, what is this, Euro currency, right? This is an 8 range chart, okay? I see one buy signal here, one up here. I'm not looking to get long up here. There's a potential short here. It's on the 1 minute chart. Sorry, that's on the 8 range chart. But if I look on the 1 minute chart, same market, just different chart type. I mean, here's a short here, a short there, some nice shorts up here, here. So it's going to vary basically on the chart that you're looking at. What do we got here? This is a 10-year, right? 10 years today. I like looking at 10 years on range-based charts. Right up here, high of the day, sell off. Weakness coming in here, go sideways, sell off a little bit, pull back. More market weakness coming in here. This was this purple level. Again, that was during the number. I'm always kind of hesitant on signals generated around a number. Today was non-farm payrolls. But, that's the whole concept of, market weakness, right? Anytime you're up near a high or a low, or you get some sort of pullback, down here, this was the previous day, you're pulling back down into the low of the day, right? You're selling off, right? This was the high. You're selling off down into here. And then what happened? Market went back up to the highs. Okay, so again, depending on the market that you're trading, the chart type you're trading, you may see more, you may see less. I said, today on the E-minis on the 1 minute chart, there wasn't much, but on the 8 range chart, there was quite a few. The day before, just curious, day before on the 1 minute chart, there was a nice one that happened around 7:56. From about 33 down into the 20s right before the cash opened, and sort of rallied back up to those levels and sold off again. Right? So again, choosing your chart type is important. Sometimes you're going to get more signals on certain features of the order flow. Sometimes you're going to get less signals. It really comes down to what you want to see on your chart. Again, not everybody uses the market weakness. So if maybe you're using a minute-based chart, you don't use it, it doesn't matter to you. But if you're on a range-based chart, it's definitely something I think you should look into and throw it up on your chart. Again, we got all these tools in here. Exhaustion prints, imbalance reversal, inverse rebalance, market sweeps, market weakness detector right here. Now, you could even, if you want, you could even shorten it to 2. I wouldn't. I think 3 is about just nice. If you go down to 2, obviously it's going to generate more signals. So the lower you go on the amount, the more signals you're going to get. You know, you're seeing here. You don't. There's no point in having more signals if you're going to be over trading, taking a lot more trades that you probably don't need to take. All right. But again, you know, sometimes people say, well, I could take the extra trades like this if I could catch a trade like this. Okay. So again, at the end of the day, it's up to you. If, like I said, you could even go further, right? Just go in here, set it to 4, which is quite strong. And let's see if there's even any signals that come up with 4 last couple of days here. Really? This is the night session. Yeah, I don't really see anything. So, you know, on a 1-minute E-mini chart, 4 is probably too strong. I'm curious how it would look on an 8-range chart. Let's take a look here. Sec here. Oh, you still got that one that I think that was generated during the number here. So you see, right? This is today. Okay, here, this was done at 1 in the morning. Okay, that was a nice one. One from the low of the day, literally, quite literally, the low of the day. It tells you how quiet the session was. You know, we're coming into the European Open, and we had a high of 22 3/4, a low of 13.5. But it's giving you this nice signal. And here, you actually got a lot of things going on in the order flow. You've got imbalance reversal, bullish prominent point of control, market weakness. You know, and the market, you know, had a nice move up. But again, there's not a whole, going to a setting of 4, even on an 8-range chart, you're not getting a lot of signals. So about 3 is about the max I use. I don't use 2. I think 2 is too short. So 3 is just nice. All right, everybody, I hope you guys got something out of this video and you understand how delta weakness works and what to look for in it. So I'll see you guys on the next video. Bye-bye.